Good morning, everyone. A very warm welcome to the 11th Colloquium on Indirect Taxes, organized by Vilgst and Tax Connect. Further, I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified chartered accountant, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is the regular speaker of various professional forums on the key area of direct and indirect taxes. Now I would like to introduce our another speaker, Mr. Rohit Sharma. Mr. Rohit Sharma has rich experience of more than 10 years in indirect and direct taxes. He is presently serving as a senior manager at Tax Connect Advisory Services LLP. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now I request to Sami sir to say a few words.
Thank you, Titli. Hi, good morning, Vivek. Good morning, all the participants.
Good morning, Samir.
Uh, Thank you for having this session, Vivek. And thanks all the participants for joining us on today, Saturday morning. We have a lot of things to discuss. I mean, there are a lot of development which has happened in last 1 month, and this session will be very fruitful, I'm sure. And Vivek, I would like to you know, like you to start with the session right away. Thank you.
Thanks, Samir, and thanks, Tikli. I'll just share my PPT. Tikli, is the PPT visible?
Yes, sir. Yes, sir.
So, good morning to everybody, and thank you to all the participants for joining our 11th colloquium, which we do monthly now for quite some time, on all the developments which have happened in indirect taxes in the month. Friends, this month and especially last week has been very, very important with the two landmark judgments by the Apex Court in indirect taxes. There are few weeks where we have such far-reaching landmark judgments by the Honorable Apex Court in indirect taxes in the same week and within a matter of 1 or 2 days. We will discuss on both these matters. One is, of course, Mohit Minerals, which has created a lot of flutter. And the other is service tax judgment by the Apex Court for taxability of secondment services, which, as per our understanding, would be mutatis mutandis applicable in GST. This month has also been important as far as filing of the GSTR 3B is concerned, and almost after 5 years of implementation of GST, we come back to the technical glitches and, more important, the legal implications of technical glitches. There are various other circulars, judgments under customs valuation issue on royalty. That is a very important judgment which is there, which we'll discuss. And as we all are witnessing who are practicing in indirect taxes, that under GST specifically, customs too, there is a lot of departmental interest and interaction over the last 1 year through various means, scrutiny of returns, assessments, GST audits at the premises of the taxpayers, access to premises of the taxpayers by GST officers, etc. My colleague Rohit would discuss on how to be ready and how to approach the scrutiny notices and GST audit by the department. And of course, we all know who are doing business in Telangana that sometimes it can get difficult in Telangana, especially in the matter of VAT. Also in GST, there have been thousands of notices by the state of Telangana. Welcome settlement of dispute scheme is there in Telangana, and my colleague Rohit would briefly touch upon that. So we'll start with the most important landmark judgment in the last week by the Honorable Apex Court. Well, those of you who have seen just the media, in fact, some of my media friends, they called and said that one of our courts in the media, they said, sir, your court is wrong. The judgment was on the powers of the GST Council, as reported by all the media houses. But you have said that it is on something else. Well, I will let you know as to why this GST Council powers was reported so widely by the media. But the crux of the matter is that the Honorable Apex Court has ruled in the case of Mohit Minerals that GST on ocean freight, that is transportation of goods by vessel from a country outside India up to the port in India, and notifications 8/2017 IGST rate and 10/2017 IGST rate serial number 10, they are ultra vires the constitution, and therefore no GST would be applicable in case of ocean freight service. It was a 3-member bench judgment, and the hearings were concluded in January 2022, and in May we had the order. The crux of the matter is, we all must be aware of it somewhat, but just to start the discussion, that whenever we import goods, there are two kinds of contracts. One is CIF, where the value of the imported goods includes the cost of the goods, insurance, as well as the freight elements. The other is FOB, that is free on board. The foreign exporters' liability is just to put the goods on board and thereafter to negotiate with the shipping line and get the goods and pay for the transportation of the goods by vessel in the movement of the goods up to the Indian port. That is with the Indian importer. So in case of import of goods, as far as the freight element is concerned, in case of CIF contracts, let us first come one by one. In CIF contracts, the service provider is the shipping line, which is a foreign shipping line. The service recipient, since the negotiation has been done by the foreign exporter and the payment to the shipping line is done by the foreign exporter, is the foreign exporter. In case of FOB contracts, the shipping line, of course, is the service provider. However, the service recipients change. It is the importer of the goods, which is the service recipients in FOB contracts. What is import of service? Import of service is where the service provider is located out of India, service recipient is located in India, and the place of the supply of the service in India. White notification 8/2017 and 10/2017 IGST rate notifications, it was notified that transportation of goods by vessels up to the port in India would be a taxable service, and it would be taxable under RCM. the tax liability would be on the recipient of service, who is the importer of the service. Now let us see what is the contest of the respondents. First argument of the respondent is a mixed argument. Two parts of this argument. One is double taxation. IGST is charged on the value of the import of the goods, which includes cost, insurance, freight, and other charges as per Section 14 of the Customs Act 1962. Under Section 3, subsection 7 of the Customs Act. However, the credit of that IGST is available in the CGST Act, right? And why IGST is charged on the cost, insurance, freight? Because under the Customs Act, it is treated as a composite supply of goods. The freight elements also is treated as a composite supply of goods. The learned ASG's argument was that, you see, Customs and Act 3.7, wherein IGST is charged, it is same as IGST under 5.1 of the IGST Act. The respondent counsel's argument was that no, Customs Act is different from IGST Act. The charge under 3.7 is under the Customs Act, and the revenue which the Government of India gets from the Customs Act is distributed to the state at the rate of 42.5% as of now, as allowed by the Finance Commission of India, or as per proportions which is fixed by the Finance Commission of India under Article 270. However, as per GST Act, this proportion, this distribution of IGST to the states is under Article 269A as per the recommendation of the GST Council. Therefore, Customs Act IGST under 3.7 cannot be equated with IGST under 5.1 in the IGST Act. Number 2, it is of course a composite supply of goods, and this composite supply of goods, which includes the valuation under CIF basis, where IGST itself is charged, that cannot be vivisected, and on the same value or a part of the same value as per the notification, 10% of the deemed value in CIF contracts and freight element in FOB contracts cannot be construed to be a service by the same authority, that is the CBIC. This, ladies and gentlemen, was the most important argument, and the court has ruled on the second part of the argument, that is the composite contract. The Honorable Apex Court has ruled that yes, it is a composite contract wherein the CIF, cost, insurance and freight, for our purpose, the cost as well as the freight element is included in the value of the imported goods, and a part of that now cannot be separately taxable as a service, right? So CIF basis, this is the most important point in the judgment, that it is a composite contract in case of import of goods, and in case it cannot be vivisected, and a part of it cannot be charged as a service of ocean freight or shipping line service. Second, you see, the tax is either, and GST is either on the provider of the service or the recipient of the service. In case of recipient of the service, it is charged under Section 5.3 or 5.4 of the IGST Act. Under 5.3, the GST Council can only notify the taxable event or the supply. However, under 5.4, it has to specifically first notify who is the recipient, if it is somebody other than the actual recipient, where it is a deemed recipient, and thereafter the recipient can be made liable to tax. The question was that whether the GST Council by its own without an amendment or whether by without exercising the powers under 5.4 as per a notification under 5.3 of the IGST Act, can it directly notify a taxable person, deeming an importer to be a taxable person? You see, there are 4 pillars of taxation, and this is one of the pillars of taxation where in the submissions of the respondent councils on this pillar of taxation, where you deem a taxable person as somebody else other than a taxable person who is in the normal course a recipient, then that has to be done by the parliament. The GST Council can only recommend on these lines, but it cannot frame the laws. The laws can be framed only by the central and the state government. On this point, the Honorable Justice, while pronouncing the judgment, he carried on for first part of his judgment, stating the powers of the GST Council was only to recommend, and the center and 50% of the state legislatures, as is the norm, can frame laws on this pillar of taxation, that is to deem a taxable person other than the normal recipient as the recipient of the service. This, friends, was reported by most of the media houses. However, the main part of the judgment of composite supply and other parts, as would be discussed by me, that was completely left out. Nonetheless, you'll see the media is has a separate court of justice rather than the tax court of justices. The third important point is where the importer in case of CIF contract is neither the recipient nor the provider of the service, can the importer be deemed as a recipient of the service and the liability can be charged on the recipient. The learned ASG's argument was that in case of Gujarat Ambuja Cements, the Apex Court has ruled that the point at which the tax has to be collected was not an area of judicial intervention. It is the area of legislative wisdom, and to frame the laws is a matter of policy, and to frame the laws on the taxable person should be left with the legislature, and judiciary should not get into this. However, this point was also not accepted by the Honorable Apex Court. The last point, the fourth point of the judgment was, and the argument of the ASG was, that since the taxable event is in India, hence the tax has to be paid in India by whoever. However, place of supply or the place of the taxable event would not impact the taxing jurisdiction, was the argument of the respondent counsel. So now the judgment of the Honorable Apex Court was on these 4 important parameters. Number 1, in case of CIF contracts, it was a composite contract, and a composite contract of import of goods could not be vivisected separately, and a part of it could not be held to be a service of shipping line. Number 2 is that the GST Council could not deem a person other than a recipient to be the recipient without passing it through the center and the state governments. Number 3, the place of supply cannot determine the taxing jurisdiction. And number 4 is that the importer cannot be considered to be as a recipient other than by invoking the powers under section 5.4 in this case. What is the way ahead for the taxpayers? That is the important questions which we are being asked after this judgment. The most important question is that what about FOB contracts? Is this judgment valid for FOB contracts also? That is, Do we continue to pay GST in case of FOB contracts on ocean freight element, which is actually included still under section 14 under the customs valuation rules, and IGST under 3(7) of the Customs Act is paid on this freight element on the FOB contract also. Well, friend, to answer this, you have to see para 253 and 254 of the Honorable Apex Court's judgment, wherein the IGST notification 8 and 10 2017 IGST rate notifications, they have considered to be as ultra virus, and therefore the levy of GST on the freight element of transportation of the vessels by goods from a place outside India to a place in India is considered ultra virus the constitution. Therefore, FOB contracts to our understanding should also be covered by this judgment. Next important question which yesterday people were asking me is they have cases under service tax also, specifically those importers whose certain supplies are exempt. So this is a cost to them and they have disputed this in service tax also. Friends, on this point, you can go through this judgment, and under Finance Act 1994 also mentioned in this judgment is there is a difference between service tax and GST. Under Finance Act 1994, it was specifically stated that the Finance Act 1994 that the service tax rules could lay down any person other than the provider or recipient also to be a recipient, which is not there in GST, and therefore as per our understanding this should not mutatis mutandis apply to service tax matters also. What do importers do in case of CIF contracts or FOB contracts in GST? Do they stop payment from April 2022? This judgment is very, very clear, and the Finance Ministry's comments on this is also very, very clear. It has accepted this judgment. May or may not be, it may go for a review, but as on date, this judgment is the law of the country, and therefore, yes, the GST on ocean freight is ultra virus, and no GST is payable on ocean freight as per this judgment. So if you do not pay GST on ocean freight, what about the self invoices you have made for April 2022? Well, that has to be cancelled, separately reported under table number 13 GSTR 1 for the purpose of GSTR 1 of April 2022, which you may have filed. Maybe you have to amend it in the next GSTR 1 to the extent of disclosing the count of the RCM self invoices under 31(3)(f) on this GST RCM on ocean freight. What about the payments which you have already made on ocean freight? Well, if you have made it under protest, you can claim it as a refund and file it as a refund. If you have not made it under protest, then you have to prove unjust enrichment. You're seeing a lot of hue and cries going on a certificate of accountants in Delhi on this unjust enrichment cause in refund matters. So finally, you have to prove unjust enrichment in this matter also, right? Before you can claim a refund on GST already paid in the matter of ocean freight. So friends, this is the way forward, and with this, you can take the cases in your company from this GSTR 3B also. The other critical landmark judgment in this month, in fact on 19th of May, I think the same date in which this judgment has also come. So two important judgments in indirect taxes on the same date. That is whether GST is payable as a contract for service in case of secondment of the employees. So, what is the crux of the matter? An employee, a high-skilled employee, was seconded by a foreign holding company to a subsidiary company in India. The question is whether GST under RCM would be payable for the reimbursement of the salary of this person made by the subsidiary in India to the holding company outside India. The question to be asked is whether this salary reimbursement from India to outside India was on account of a contract of service wherein there is an employee-employee relationship between the subsidiary in India and the employee, that is the secondee, or it is a contract for service by the holding foreign company to the subsidiary deputy company in India. Various questions have been answered in this judgment. The most important is whose employee is this secondee? Is it the employee of the subsidiary, that is the deputy, or is he the employee of the deputer foreign company? The question to be answered is that whether in case TDS and Provident Fund of this employee was paid by the deputy subsidiary in India, does he become the employee in India? Whether a social security charge payable for the same employee by the holding company in a foreign country, would that make him as an employee of the foreign country? Where the subsidiary is only reimbursing the salary of this deputy secondee, does the fact that there is no consideration for the contract for service other than the mere reimbursement, does it make it a contract where there is no consideration? There is a letter of understanding also between the subsidiary in India deputy company and the secondary employee that you would serve under the subsidiary company and you would be under the supervision and the control of the deputy Indian company. Does that make him a employee of the Indian subsidiary deputy company? Whether this control and supervision over the employee of the deputy would be just for operational purposes, or would it be a final control for the period of the secondment? Would the fact that the termination of this employee being in the hand of the deputer company, would that make him an employee of the holding company? So many questions, ladies and gentlemen, were put forward before the Honorable Apex Court. But there are various principles which are laid by the Honorable Apex Court. The silver lining is, I am repeating, the silver lining in this judgment is that the Honorable Apex Court has ruled that there cannot be any magic formula to lay down a doctrine in secondment cases that yes, if this happens, he will be considered as an employee of the Indian company and it will be considered as a contract of service and service tax or GST would not be payable. And if this happens, then he will be considered as a employee of the foreign deputer company and GST or service tax would be payable. The Honorable Apex Court has said that the contract has to be read in totality and On the facts of the case, a judgment has to be made whether GST or service tax, while this was a judgment for service tax, but it would apply mutatis mutandis to GST as per our understanding. So a decision has to be taken on the facts of the case whether GST or service tax would be applicable for the instant secondment or not. And the courts can do only a balancing act. In this particular case, on the basis of facts of the case, it was held that since the social security of this employee and the salary payment of the employee was made by the deputor foreign holding company, since the employee's contract could be terminated by the foreign holding company, since there was a consideration, maybe directly or indirectly, which was paid by the Indian to the foreign company for these services, hence this secondment of the employee by the foreign deputor to the Indian deputy would be taxable under service tax. So what are the way forward? Okay, another thing is there was no question of revenue neutrality, and the court has distinguished the earlier judgments on revenue neutrality in case of reverse charge in SRF and Coca-Cola, saying those were specific judgments, right? So very, very important, wherever we are arguing on revenue neutrality, this Honorable Apex Court judgment would be important to understand that it has distinguished the other revenue neutrality judgments, saying that they were specific to those matters. Another important thing is that it has struck down the question of section 74 invocation, saying that there was no intentful and willful suppression of the facts of the case, and extended period of limitation would not apply. So this is a very, very important clause, and for all secondment contracts where, if at all there is an allegation of suppression, this judgment can come to the rescue. So finally, all of us are here to understand what is the way forward. अभी करना क्या है future में? Friends, most important for all companies, departments, sales and marketing, HR, finance, taxation, admin, now various departments of the company cannot work in silos. HR has to work in hand with finance and taxation departments, and the contract has to be very, very clear on the taxability aspects also. So we have listed down 6 important considerations to keep in mind where you are entering into a secondment contract. Number 1, you have to be very, very clear that the salary has to be paid by the deputy to the employee directly. Number 2, this social security of the secondee has to be paid by the deputy, should not be paid by the secondee. Number 3, it is better that the employee, to make it a clean contract, it is always better that there is a temporary suspension at least of the employment contract between the deputor and the secondee employee. This suspension can be for a specific period which can be extended. Now, this letter of understanding, generally there is a letter of understanding between the secondary employee and the deputy. However, actually we recommend that this letter of understanding, if at all, has to be between the deputor and the deputy rather than the deputy and the secondary employee. And finally, there can of course be a quid pro quo. And if at all there is a service fee which requires to be paid by the deputy to the deputer, then that service fee would be liable to GST or service tax as the case might be. So you have to bifurcate the contract between a contract for service where a service fee is paid and charged by the deputer to the deputy and paid by the deputy to the deputer, and a contract of service between the secondary employee and the deputy. Control and supervision cannot be argued after this judgment. The Honorable Apex Court was very, very clear that this control and supervision point came when there was a labor contract. In earlier days, the labor contracts are a thing of the past. Now we are talking about high-skilled employees. So this control, and nobody can control a high skilled employee and directly supervise, right? They are guided by the terms of the contract rather than a control and supervision. So this control and supervision point has been distinguished in this judgment. So friends, these 6 points, this PPT will be shared with all the participants. These 6 points in our view should be considered by the HR department and the taxation department whenever you are framing a secondment contract. Well, the next important thing is filing of 3B, which has been extended till the 24th by an advisory of the GST network, which on the 15th of May, which has been withdrawn on the 17th of May. What was the advisory? That since the GSTR 2B was not auto-populating, there was a technical glitch. Therefore, two important words in point 3 of the advisory on your screen. The taxpayers in that period when the advisory was active, the taxpayers could file their GSTR 3B on self-assessment basis and by using GSTR 2A. So, what is self-assessment? Under section 59, self-assessment is when you assess and pay the tax by taking input tax credit. Number 2, GSTR 2A would be used for matching and taking the credit while doing the self-assessment. What is the legal validity of this GSTN advisory? Friends, as per notification 4 of 2017 Central Tax, GST portal administered by the GST network was the portal under section 146 of the CGST Act as the machinery to file the GST returns. Since during 15th and 16th and 17th of the May, during these 3 days, the machinery for filing the GST returns and self-assessment in form GSTR 2B as notified was not available. This alternate machinery, which is advised by the GST network, which is the administrator of the notified GST portal, would be a legal document. So, it is our respectful submissions over here that in case certain taxpayers have filed their GSTR 3B during 15, 16, 17 on the basis of GSTR 2A, in case some of those invoices which were appearing in GSTR 2A during these 3 days and GST returns have been filed and which will not appear in GSTR 2B for the same period also, that ITC would be completely eligible as per the GST law, because it is a trite law that the Act and the law as on the date of the performance of a specific act prevails, a subsequent change in the condition would not have a retrospective amendment until otherwise specified. So, if such credit has been taken, it is our respectful submission that since there was no machinery during this period, and this machinery under 2A was itself advised by the GST network, then that ITC as per 2A would be 100% eligible and cannot be disputed by the department going forward. However, if after 17th of May, when this advisory was withdrawn, if you are filing GSTR 3B, then of course GSTR 2B, if it was available on the portal, would prevail. So friends, there are various other aspects to this time's GSTR 3B filing. One is of course this aggregate annual turnover. You have to, again, every year you do this, you have to, this thing is also on now. In May 2022, you have to finalize aggregate annual turnover and submit it in the GST portal. And GST rate of 6% on bricks, etc., which was notified that 6% rate is not available on the GST portal. Again, GST law and GST network are working in two different ways, but then that is how this GST law has been. So there is an advisory on how to report this 6% rate on bricks, etc., which were notified on 1st of April 22. Friends, very, very important for filing GSTR 3B, very important advisory and circular by the Rajasthan state government. And we have discussed at various levels with various officers. This was discussed between the center and the state governments also. So it is our advice to be careful while filing the GSTR 3B. Two important points to be noted is most of the taxpayers do not disclose ineligible credit, which is just a disclosure. It has no revenue or tax implication under table 4D1 of the GSTR 3B. Taxpayers generally report, or many of the taxpayers generally report, zero figure in that 4D1. That, friends, is an mistake. It has been clarified in this circular that the ineligible credit should be tracked by you, and the ineligible credit for the month has to be reported in this 4D1. Similarly, for banking companies, either you take the credit and reverse this 50% of the credit as per Rule 38 read with 17.4 in the reversal column 4C, or if you take the 50% of the credit only in 4 you see A, then you have to at least disclose that reversal under this amount of reversal under Rule 38 for banking and NBFCs under 4D2. So important points to keep in mind. We have been deliberating this in various forums on how to file GSTR 3B. This, especially for the large corporates, it is important to keep this in mind, especially this ineligible credit disclosure in 4D1. Mind that even legally, zero is also a value. The moment you disclose zero in 4D1, it means you are assessing and declaring that you have not taken any ineligible credit. You have not been subjected to any ineligible credit, which is not the right disclosure. Another important judgment, although by the Delhi Sestat, but the important in the customs law is that whether the royalty payable on the sale value on the license fee, would that royalty be included in the import value of the goods from the same supplier or from other companies also. Very, very important principle, friends. As per section 14 of the Customs Act and 10(1)(c) of the determination of value rules is that if this royalty is not a precondition for import and it is only on the sales value, then this royalty would not be liable to be included in the transaction value of the imported goods. We have listed down the various important features and our view in this PPT. The judgment of the Honorable Delhi Sestat in the matter of Kruger ventilation. You can go through this at your own pace. Well, bill to ship to cases, there are various judgments. Important to understand. You see, many of the times we are queried that, say, you are located in Uttar Pradesh in Allahabad. Goods are, your supply is located in Maharashtra. Goods are moving from Maharashtra to the recipient in Shandilia in Uttar Pradesh. So you also make a CGST, SGST bill on the your final customer in Shandilia. The Maharashtra supplier makes a IGST bill on you. The way bill is made as per advisory by the GST authorities. The way bill is made either on your invoice on this or the supplier's invoice. It is better to make the way bill on your invoice. However, you may not want to disclose your cost price or your selling price to the supplier. Neither do you want to disclose your cost price to the customer. So what do? When the goods are in transit, you make another e-way bill on your invoice and attach all documents and provide it to the transporter. So say your goods move to Shandilia from Allahabad in this case. So what do? In Allahabad, you make another e-way bill where you show dispatch from Allahabad, right? So on the basis of your invoice, that would be considered to be as a valid document as held by the Allahabad High Court in the case of Seafood traders. I understand this is a complicated transaction. When you read this judgment, you will understand how to structure this transaction so as to be in the ambit of law and also so as to ensure that your business privacy and secrecy is maintained between your supplier and your customer. Another burning issue is that many a times import of goods happen where say the tax rate is erroneous. You have to pay the excess tax through a challan. After the department intimates you, in Delhi, we are seeing that many a times the GST authorities are denying the input tax credit under GST of this excess tax paid after the customs authority pointed out on three arguments. Number one, it is time barred. Number two, challan is not the duty paying document. And number three, it is disallowed after being pointed out by the department under section 17(5). Friends, it is our respectful submissions that this credit cannot be denied because there is no time barring for import of goods ITC. The challan is a duty taking document because the wordings of Rule 36 are very clear that there can be any similar document to a bill of entry and it will be considered to be as a valid duty taking document, and pointing out by the customs authority is not as per section 17(5) disallowance, and therefore this would be completely an allowable transaction. Another important burning issue, this is the last issue which I will take. After this, I would hand over to my colleague Rohit, who would take you through the scrutiny issues and the Telangana settlement of dispute scheme. So the other important issue is whether GST ITC is reversible under section 17(5)(h) on scrap, which is a normal loss. Friends, you can go through our write-up at your own pace. I would submit before you our respectful submissions. The items mentioned under 17(5)(h), that is reversal required on account of goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples, are those transactions where the goods have been taken away or the instant goods or inputs are no more in existence. When you are scrapping off your finished products before supply, it may be a normal loss in manufacture. It may be a transit loss before supply at your depots. But in these cases, the losses are not taking away that material or not absolutely ending the existence of those inputs, and therefore there is no reversal requirement in case of scrap where the normal loss is as per industry standard. The same was also held by the Honorable Madras High Court in the case of ARS Steels and Alloys International. Such judgment was reiterated in the case of RK Ganapati Chettiar by the Honorable Madras High Court again. So with this, I put my voice to rest and I hand over to my colleague Rohit, who would take the session forward. Please do keep on typing. I have seen many questions on the chat box. Please do keep on typing your questions. We would answer all of them at the end. Over to Rohit.
Thank you, Vivek sir, for giving me the opportunity to take forward. We will discuss, first I like to wish a good morning to all of the participants, and we will discuss two separate sections over here. One is Haryana GST return manual, which has been recently issued by the Haryana Commercial Tax Department, and another important one-time settlement scheme, which has been notified by the Telangana Commercial Tax Department for the VAT, CST, and Inti tax matters. Just let me share my PPT. Yeah. So we'll start with Haryana GST Return Scrutiny Manual. This manual is discuss about how the scrutiny of returns in the state of Haryana will move forward. Recently, we are getting so many notices for scrutiny of returns and GST audits. First of all, we need to differentiate that scrutiny of return is different from the GST audit. So Haryana state government has issued a GST manual to standardize and to streamline the procedure for scrutiny of return in the state of Haryana. There are the procedures specified in the manual that how this scrutiny of return will take forward by the officers, how the taxpayer should have the understanding that how to reply, what will be the procedure, and what will be the procedure to conclude this scrutiny of return. First, we need to understand who are the eligible taxpayer for this scrutiny of return. So only the taxpayer who are under the state jurisdiction are falling for this scrutiny of returns. So we are expecting that whose jurisdiction is state, those taxpayer under GST may receive these notices for scrutiny of returns from the department. What will be the frequency of returns? As per the manual, the notice will be issued for one financial year only, but they have taken a scope that in case they have identified, the officer has identified that during scrutiny of return of a particular financial year, that there are discrepancies in another financial year also. The officer have the power, so they can extend the financial year scope to the next financial year also, or previous financial year also. So what scrutiny will be done? The taxpayer will be selected on the basis of different parameters they have in their AI and this system. The Haryana GST department will get instruction from their head office as well as from the TRU unit, tax research unit from the department. They will scrutinize the data on the basis of return filed on the GST portal, the data available on the e-waybill portal, and different risk parameters like claiming of refund on export against without payment of IGST. We are expecting that these type of taxpayer may receive the notice for the scrutiny of returns. All this process of scrutiny will be taken up by the department through the proper officer. So we need to understand who are the proper officer for the instant case. As per the manual, three officers has been designated as proper officer. First is Deputy Commissioner of State Tax. Second is Excise and Taxation Officer of State Tax. Third is Assistant Excise and Taxation Officer of State Tax. Now this Excise and Taxation Officer of State Tax has been given the primary responsibility. So in case you receive any notice, you can approach to your jurisdiction Excise and Taxation Officer for any clarification required in this matter. Section 61 read with Rule 99 give power to the Haryana GST Department for scrutiny of return. This section 61 prescribe that what procedure the department need to follow for scrutiny of return, and Rule 99 has been prescribed the forms and procedure to get the scrutiny done. Like the Rule 99 has prescribed that the notice for a scrutiny is to be issued by the department in form ASMT 10. The taxpayer need to reply in form ASMT 11, and the conclusion of the audit will be deemed only after issuing form ASMT 12 by the department. We will discuss in detail what will be the procedure for this scrutiny. In this manual, the department has also clarified that what action will be taken by the officer in different scenarios. For example, suppose the taxpayer has received ASMT 10, but the taxpayer is not replying in form ASMT 11. So the department will take initiation, and the proceeding will be done under section 73 and 74 under the Haryana GST Act. Second scenario may be that the department has issued ASMT 11, that the taxpayer has received ASMT 11, but the taxpayer has not made any payment of tax interest, and with the explanation the department is satisfied. So the officer will issue ASMT 12 only after getting reply in ASMT 11. It may be the case that the department is issued ASMT 10. The taxpayer is agreed with the demand, paid the tax in form DRC 03, and submitted reply in form ASMT 11. After this, the officer will verify the DRC 03 and issue the order in ASMT 12, which will be deemed as conclusion of the proceedings. It may be the case that the department has issued the discrepancy in return in form ASMT 10, but the taxpayer feel that no, this is not matching with the analysis, and the facts mentioned in the ASMT 10 is not in accordance with the details available. So the taxpayer can file reply in form ASMT 11 and make representation before the officer. If the officer is convinced, he will issue ASMT 12. It may be the case that the taxpayer has submitted the reply, but the officer is not convinced. In that case, the officer may hand over the matter to the investigation authority, or take proceedings under section 73 or 74, or he has the power to initiate the special audit or specific audit in the instant matter. It may be the case that the taxpayer has received notice in form ASMT 10, but the reply in form ASMT 11 has not been uploaded by the taxpayer on the GST portal. In that case, the officer is not able to issue form ASMT 12. So the officer has been given instruction to request the taxpayer to upload form ASMT 11 on the GST portal. So it is very important for all the taxpayer who have received ASMT 10 to upload the reply in ASMT 11. Even if you have submitted the form in hard copy, you have represented the matter before the officer, but uploading the form ASMT 11 on the GST portal is very important to conclude the matter and get form ASMT 12 from the department. This is a flow chart how the scrutiny process will flow. First, the tax research unit or the head office of the Haryana GST department will pass on the information to the jurisdiction officer. The jurisdiction officer analyze the data shared by the tax research unit and the head office. If he found that the data shared by the head office is according to him is fine and the notice can be issued, the officer will issue notice in form ASMT 10. Here it is very important to note that we have seen in so many cases that the notice has been received in through a letter, but the letter is not in the form of ASMT 10. It is a general letter. So in this case, we recommend the taxpayer to request the officer to issue in form ASMT 10 through a written submission, so that the proceeding can be in a flawless manner. After receiving notice in form ASMT 10, the submission is to be made by the taxpayer in ASMT 11. In case the taxpayer is agreed with the quantum of tax, interest and penalty levied in form ASMT 10, the same can be paid by DRC 03. The written submission in the hard copy and representation can be made before the officer for conclusion of the matter. Again, on the cost of reiterating, we like to mention that form ASMT 11 uploading online is very important. Only then for the ASMT 12 will be received. It may happen that you have uploaded the form ASMT 11 on the GST portal. You have submitted the document in the hard copy, but department had not issued form ASMT 12 even after so many days. Until and unless department issue form ASMT 12, the matter will not be concluded. So we request and we recommend that you should follow up with the department to issue form ASMT 12. In case they are not issuing, just submit a follow-up letter that in case any further document is required, please submit, please let us know, or else you kindly issue form ASMT 12. So this ASMT 12 is very important. In case department is not satisfied with the reply of the taxpayer filed in form ASMT 11, the department may issue form GST DRC 01A. This DRC 01A, in case the taxpayer is agreed with the value mentioned in DRC 01A, the payment can be done by the taxpayer in form DRC 03 and form DRC 05 can be filed for conclusion of the case. In case the taxpayer is not satisfied with the allegation made in DRC 01A, the reply can be filed in Part B of DRC 01A. If a part of the tax is agreed, then the tax can be made in the form DRC 03. And for conclusion of the matter, the department will issue form DRC 07. These all the forms is to be checked on the GST portal. Please ensure that these forms are available on the GST portal. It may be the case that the officer has uploaded the detail on the GST portal, but the taxpayer is not aware with this. So it is very important to regular check the GST portal for any type of such notices and process in these proceedings. Now some checkpoints are required for in case you received any notice. Every notice should have DIN. The In case there is no DIN, the notice is not to be treated as a valid notice. So you check that there should be a DIN in every notice. In case of scrutiny of returns, the notice is to be issued in form ASMT 10. The form ASMT 10 should be self-explanatory, that a detailed reason for such scrutiny initiation is to be mentioned in ASMT 10. It should not be a one-liner. The detailed reason is to be there. Along with this, quantum of tax, applicable interest and applicable penalty should also be there in the ASMT 10. The period of return should be specifically mentioned, that for which return period the ASMT 10 has been issued. This ASMT 10 is to be uploaded by the officer on the GST portal. So the taxpayer need to verify. In case if I find that the form is not available online, you can put up request before the proper officer to upload the form online. And again, it is very important to file reply and get ASMT 12 on the GST portal. Now, in case you received any such notices, there are some area of concern, and these are the areas which department may going to check. So the taxpayer need to prepare themselves to deal with this type of notices. First concern is the difference in GSTR 1 versus GSTR 3B. How we can check whether there is a difference or not? The ready report is available on the GST portal. You can check the monthly summary report available, and you can make a reconciliation at your end before getting this type of scrutiny, so that in case you received any such type of scrutiny, you can submit a detailed representation in the matter. It may be the case that there may be several reasons for difference in 1 versus 3B, like the invoice has been filed in GSTR 1 in this month, but the tax liability filed in subsequent month, or the vice versa. One another reason is import of service, which has been reported in GSTR 3B under the under table 4A3, but the tax has not been paid in table number 3.1D. So it is very important to match the RCM liability reported in table number 3 with the ITC availed in table number 4 of GSTR 3B. Further, the RCM reflecting in GSTR 2A, it should also match with GSTR 3B. The liability reported under RCM may be more in GSTR 3B in comparison to liability of RCM reflecting in GSTR 2A, but it should match. You should submit a reconciliation for the same. You must have received so many queries from the department. In case the liability paid by you in most of the liability paid by you in cash, sorry, in credit. So the department are raising queries frequently that why you are paying less liability in cash and why high utilization of ITC is there. So a proper justification and submission is to be made for in this matter. In case you have taken a ISD registration, you have multiple branches and taken a ISD registration for allocation of ITC, common ITC, this should match with the ITC auto-populated in GSTR 2A. This report is readily available on the GST portal. Again, all other ITC is to be matched with ITC available in GSTR 2A. Several notices you must have received for difference in all other ITC with the GSTR 2A. In case there is a differences, you must have a detailed submission and reconciliation for the same. A major gray area that is different in e-waybill versus GSTR 3B. Most of the taxpayer has ignored this section. The e-waybill and GSTR 3B should match with each other. If it is not matching, there should be a proper reconciliation for the same. The major challenge in this the data available on the e-waybill portal is only for the last 6 months. But you have received the notice, you may have received the notice for previous 2 financial years. In that case, the reconciliation is a hectic task in this section, because maintenance of records for e-waybill is very clumsy in this GST design. So it is very important to do the reconciliation of 3B versus e-waybill at regular intervals. One of the area of scrutiny may be that you have availed the ITC in respect of suppliers whose registration has been cancelled retrospectively by the department. Now, in this case, the taxpayer do not have any malified intention for claiming this ITC. The taxpayer has received the invoice, received the goods or services, paid the amount and availed the ITC. But the department is not considering the submission of the taxpayer, and they are insisting for reversal of ITC for the instant matter. In this case, the Honorable Calcutta High Court have given a judgment in case of LGW Industries Limited versus Union of India in 2019. The Calcutta High Court held that the purchase and transaction in question are genuine and supported by valid documents. These valid documents are very important. You need to maintain a valid documentary evidence like copy of invoices, confirmation ledger from the vendor, bank statement where you can substantiate that you have made the payment. These type of documentary evidence need to be maintained. So on the basis of this judgment, you can counter your allegation by the department. Again, in case the invoice and debit note issued by the supplier, but he has not filed the return. In this case, this is impossible task for the taxpayer to check these compliances of the counterparty. There is a judgment of Arise India Limited by the Honorable Supreme Court in the case of Delhi VAT. We can take the shelter of this judgment or submission of the reply. You need to ensure that the last date of availment of ITC is taken as per section 16(4) in the return. The import, in case you have availed ITC as per import of goods, it is matching with GSTR 2A, and a reconciliation should be prepared as per the detail of import as per IceGate portal. In case you are dealing with exempt supply also, there should be a common reversal of common ITC as per rule 42 and 43. In case of delay filing of return, the interest should be paid as per in terms of section 50. In case of delay filing of return, late fee should have been paid. At the time of filing GSTR 999C, you need to ensure that the bifurcation of ITC has been correctly reported in table 6. Reversal of ITC has been reported in table number 7. There should be a proper reconciliation of GSTR 2A versus 3B, which is reflecting in table number 8. The liability reported in table number 9 should be properly reported. In table number 10, 11, 12 and 13, these areas should be covered on the basis of ITC claimed or reverse or amendment made is to be in the subsequent financial year. These tables are the major concern area of the department. The transitional credit should be properly taken. In case there is an issue, the department may do a detailed audit in this matter. For scrutiny of return, a similar instruction has been issued by the CGST department on dated 22nd of March. So this is about Haryana GST scrutiny return manual. The next point of discussion is Telangana one-time settlement scheme. We may have experienced in so many cases in Telangana state that there are some litigation which for which there is no specific reason or there is high reason for litigating, but still we are getting notices and litigation has been going on in the state of Telangana. So this is a welcome move from the department in the Telangana commercial tax after Maharashtra, Karnataka, Kerala, Bihar and West Bengal. The Telangana state one-time settlement scheme has been announced on 9th of May. As per what are the acts covered under this scheme? The Andhra Pradesh General Sales Tax Act, Telangana VAT Act, CST Act and Telangana Entry of the Goods into Local Area Act. If there is a litigation in this act, the scheme can be opted. There is a separate application for each financial year. In case the dispute is before any tribunal or the court, the appeal is to be withdrawn fully and unconditionally by the applicant before applying for this. If is there any admitted tax, 100% tax is to be paid, and for the disputed tax, 40% is to be paid for General Sales Tax Act matter. For VAT and CST, 50% amount is to be paid, and for entry tax, 60% of amount is to be paid to settle the matter. interest and penalty will be completely waived off. In case the amount payable is more than 25 lakh, there is a facility for installment up to 4 equal monthly installment. If you want to avail more than 4 installment, the applicable bank rate will be applicable. It is specifically mentioned that no refund will be given under this dispute settlement scheme. What is the time limit for filing the application? Application is to be filed between 16th of May to 30th of June. Within next 15 days, the scrutiny of application will be done by the panel of the officer, and the intimation is to be made to the concerned taxpayer. After getting the intimation, the submission can be made for the settlement along with the proof of payment of tax between 16th of July to 15th of August. The application should be made online, and in case there is no business, the application can also be made by the offline. What is the process? You need to make the payment, submit the payment detail along with the necessary document before the department, and along with the submission for withdrawal of the appeal in case there is appeal is pending before the tribunal or the High Court. So this is about Hyderabad one-time settlement scheme 2020-22. So thank you very much for your patience hearing. Thank you, everyone.
Thank you, Rohit. And was well deliberated on the Haryana SOP, and specifically this Telangana settlement of dispute scheme. It is quite lucrative, especially in VAT and central sales tax matters. 50% of relief is not a small relief, and one may see what is the liability. Also, there is an option to pay in installments, so that is another good thing which is there. We'll take the questions in the next 15 minutes. There are so many questions. Okay. Mr. Nagaraj says shareholding by foreign company will attract GST. Holding company will attract GST. No, not at all, sir. It is not a supply of service. It is a financial transaction wherein a capital has been provided from the holding company to the subsidiary company. Mr. Jha says if the SSC supplies service in domestic and export to foreign companies with LUT without payment of IGST, how and which part of ITC refund is claimed from the department, and how ITC is to be claimed? Well, Mr. Jha, there is a formula. If you see Rule 89, Red Weight Section 54, there, and the other rules are also there. There is a formula wherein the crux of the formula is the numerator, you put the export of services value, denominator total goods and supply services value into the total ITC. Okay, minus the ITC, total ITC. Yeah. So you can apply that formula, and ITC only on capital goods will not be available. Otherwise, other ITCs are available for refund on proportionate basis to the extent of the proportion of the export of services to the total supply. Mr. Ramanujam, what process to follow if IGST on ocean freight paid under ICM credit availed and utilized? Well, credit availed and utilized means there is an enrichment to you, no refund shall be available to you, sir. Mr. Alok Mathur, we have taken ITC on GST paid on ocean freight. Hope we don't require to take any action. Of course not. Only going forward, on the basis of this judgment, GST does not require to be paid in case of ocean freight. Any impact if GST on ocean freight paid under RCM credit availed as utilized? No impact. That is done and out. Mr. Girish Sharma says we have litigation pending with respect to service tax on ocean freight as CIF contract. Sir, as we have discussed as per the Finance Act 1994, as far as the person who is responsible to pay the tax. To that extent, the Finance Act 1994 is wider than the CGST or IGST Act, and to that extent, this judgment does not mutandis apply to service tax. However, on the point of taxability, on the point of double taxation, etc., you may contest, but that has to be contested under service tax. This judgment would not, in our view, apply directly to service tax. Mr. Nagaraj says, secondment, if we pay GST now under ICM for the financial year 17 to 20, can we get input based on this order? Sir, it is not as per order, but in case you have missed out any RCM and you pay it now, self-invoicing is the document on which ITC can be taken, which is not time barred, and therefore you can take the input tax credit also. However, the interest portion on the time of supply provisions on the RCM paid now may apply. What will be the implication if Apex Court's judgment on the above pending litigation? Okay, we have answered this. In case of FOB contracts, can we take up to freight forwarders not to charge GST on IGA ocean freight component? Yes, of course. I think this judgment would apply for FOB contracts to the extent of para 253, 254 of this judgment, where it has categorically specified that notification 8 and 10 2017 IGST rate both are ultra virus the constitution, and therefore GST on ocean freight is also ultra virus. Okay, what will happen in case still invoices are showing in 2A but not showing in 2B, but the returns are filed by the vendor on 11? Well, in case this is happening, it is a technical glitch. At that point, if you have evidences that the tax was paid, the uploading of the invoices was done on 11th, then you can, on the basis of those corroborative evidences, take the input tax credit. However, evidences has to be conclusive, and certain persuasive evidences will not do. You have to be very, very minutely, you have to prove and categorically that actually your invoices were uploaded. There was no issue in the uploading of the vendor also. So you have to be very careful in that respect. Mr. Dinanath Gupta says we have downloaded 2B on 19th and after matching ITC availed. However, today on downloading of 2B, some more entries are appearing which were not available in earlier 2B downloaded on 19th. Still errors in 2B. Whom to blame for missing ITC claim due to system error? Sir, you are right. At best, you can claim interest from the department by going to High Court on these system glitches which are there. Otherwise, I don't think much can be done as of now. Yeah, it is a very, very sad situation that even after 5 years of implementation of GST, we are still tackling all these system glitches. Okay, Mr. Taranjit Singh has a solution for you. File grievance and claim 2A ITC. Matching date should be on 13th. But Mr. Singh, if you are replying to Mr. Dinanath Gupta, I think he has already filed his 3B. Mr. Saurabh Butra says, please repeat as to how Mohit Minerals is not applicable to service tax matters. Well, the Finance Act 1994, the person recipient or the person liable to pay tax, that is much more wider than GST. It includes any person as may be notified, which is not there in GST. Under GST, a separate Parliament needs to pass that person. In Finance Act 1994, that was not there. The separate person on which RCM would be applicable could be notified under Finance Act 1994. To that extent, this Mohit Mineral judgment, in our view, will not be applicable to service tax matters. what will be the last date of payment in case of monthly GSTR 3B? Yeah, good question. Some people have asked me this. Yeah, well, for this month's extension of GSTR 3B till 24th of May, the tax needs to be paid under section 39 till the 24th of May. So date of filing of GSTR 3B for the month of May, that date would be the last date for payment also. Mr. Mathur says whether the service provided by Indian entity to holding entity towards deputation of qualified employees amounts to export of service. Yes, sir, of course, it does amount to export of service. In case of FOB contract, importer would be recipient of service of ocean freight, whether that will not make the importer still susceptible to GST. I think we have deliberated this. Yes, to this extent, the importer is the recipient. But to the extent of whether it is ultra-virus, this entire ocean freight GST is ultra-virus, that has been answered in para 253 and 254 of the judgment. To that extent, I feel that this judgment would be applicable on ocean freight in FOB matters also. Mr. Kishore Savla says, is Apex Court's judgment applicable for provisions of service tax? We have answered this. Mr. Suradkar says, if the SSC supplies services in domestic and export to foreign countries with LUT, I think we have answered this. Mr. Nagaraj, based on secondment order, any impact on income tax law for issue of Form 16? Yeah. As we discussed during our deliberation, that income tax may be deducted by the Indian deputy, right? Even provident fund, social security payments can be made for the secondary by the Indian deputy company. However, that does not mean that GST is not payable. So even if the employee, secondary employee is still the employee of the foreign company, the Indian deputy company can deduct income tax, pay income tax, and issue Form 16. However, to the extent of applicability of GST, Form 16 does not have any implication as per the instant judgment of the Honorable Apex Court. Okay. Mr. Sachin Amrute says, is principle of natural justice to be followed mandatory for closure of ASFT 10 notice? I think yes. Rohit, your views?
Yes, I also think that yes, principle of natural justice is to be followed, and ASFT 12 is to be issued by the department in the due time immediately after submission of ASMT 11.
Yeah. So now the question is, if you want a hearing for ASMT 10 to apply this principle of natural justice, that hearing can of course be requested by you. And if there is an order which is passed without the hearing, confirming a demand, that would be in violation of natural justice and ultra-virus the constitution. Whether sending notice to GSTN of the taxpayer alone is valid without sending it on registered mail. Chance of missing view on the portal. I feel this portal uploading is valid. Rohit.
Yes, sir. This notice uploaded on the GST portal is a valid way of communication. So we recommend that you should regularly check the GST portal, the notice and order section.
Yeah. Can proper officer issue DRC 1A for amount exceeding the tax showed in ASMT 10? Yeah, of course, GST 1A is a pre-show cause notice, and he can issue, but reasons has to be specified so that you can answer this pre-show cause notice. Okay, Rohit, your views on this?
Yes, I have the same view that the amount can be changed, increased by the proper officer after scrutiny of returns, and at the time of issue of SOCOS notice also the value can be increased by the proper officer on the basis of, definitely on the basis of the reason to believe.
Yeah. Mr. Suresh Nair says, could you please explain media news about Supreme Court body flow to the name believe that GST is one nation, one tax? Yeah, so we discussed this, while the finance ministry has issued an advisory post this Supreme Court judgment, and it says that there is nothing new which the Honorable Apex Court has said. But it is a fact that in the GST Council, many a times the state commissioners and finance ministers' consent is not fully taken. And to that extent, now with this judgment, we may see, just like in the state of Tamil Nadu, many other committees or councils or subcommittees being formed, which would deliberate on these GST matters and send their recommendations, and the GST Council may be bound by to at least take into consideration those recommendations. So, yeah, to that extent, we may see a lot of action now in the country as far as the state's powers under GST is concerned. It's also we have always maintained that this GST portal just being centralized in Delhi, that is causing a lot of hardship to the state taxpayers who are not in Delhi or NCR. And so just now we had a refund issue. We had another issue in, Chhattisgarh, where the officer, for some reason, he blocked the portal. He suspended the GST number of one of our taxpayers. We sent one person to Delhi since we have an office in Delhi. So our person could go to Delhi. Now that Delhi GST network says that no, this can be done only in Chennai. So again, one of our office persons in Chennai, he ran to that Chennai GST network office, and then it could be rectified by somebody in Chennai. So to that extent, we feel that this GST network should have officers in every state, or at least there should be some nodal officer in every state who can take decisions, who can raise levels about these issues. Otherwise, the state taxpayers, other than the state of Delhi, it really becomes difficult. To that extent, I feel that even though it is one nation, one tax, but there should be some delegation and decentralization of these portal issues. Mr. Jay Mehta says we are issuing cross-charge invoices to the branch till ISD registration compulsory. Mr. Mehta, we have deliberated this over the last, so many years together. It is our respectful submissions in this that cross-charge is not defined under GST anywhere. It is not allowable under GST. The ITC, which is common, has to be routed through ISD registrations. Currently, we are dealing with these matters in various states in India where certain taxpayers have cross-charged. Now, just for example, say your HO has received the service of a GST auditor, right? GST auditor raises the bill on your HO. How do you think your HO can cross-charge GST auditor's services? Does the HO become a GST auditor or a statutory auditor? No, it cannot be. So it has to be routed through this ISD mechanism also. This is our respectful submissions in this case. Okay. Thanks, Mr. Jay Mehta. Can you arrange a webinar explaining the legal stand for taking ISD registration or continue cross-charge? We have explained this. We can discuss it in details in our next colloquium coming month, of course. Point noted. Import service RCM applicable. Yes. Mr. Gupta says, can GST billing be made to the foreign company as a bill in USD dollars which shipped to its subsidiary company in India? What are the GST implications and customs requirement for such billing? Okay, so GST billing to foreign company shipped to in India. So which means that you are supplying the services to an Indian company. However, you are recovering the money to form a foreign company. Yes, this bill to ship to in case of services is also eligible. It has no customs impact because it is a service, it is not a goods. Number two, what do? You do a bill to foreign company, ship to your subsidiary in India, and the foreign company raises its invoice on the Indian company, and the Indian company pays the tax under RCF. But why do you want to do this? You have to see, because there is a tax implication over here. It does not become an export of service then. Mr. Sujoy Bhattacharya says, can scrutiny of returns and GST audit be considered as GST assessments? Will we receive order from department? Scrutiny of return, yes, you receive ASMT 10. GST audit, it will be closed on show cause or audit memo if you comply or dispute that show cause. Will it be considered as an assessment under GST? Yes, it may be, but there are other options of Section 71, Section 64 with the GST department until it is time barred after 5 years. So just ASMT 12 or a GST audit for a particular financial year does not, free you from assessments or further assessments by whatever name called in GST. Okay, as per recent judgment outcomes on outdoor catering, you see, if you can, Mr. Singh, you can deliver, you can explain this outdoor catering with which judgment it is there. I am not aware of any Apex Code judgment on outdoor catering. Mr. S. Kippen says, what about air freight, sir? Sir, air freight is liable to tax. If it is liable to tax, now it is liable to tax. It is only ocean freight. But question is again, if it is a CIF contract, but air freight, we will have to check whether it is liable to GST. I think it is exempt, but we have to check this. Mr. Kishore says, is it possible to share recordings? Yeah, it will be uploaded on the Vilgst website as well as the YouTube of Tax Connect. It will be shared. Recording will be shared with you. Mr. Santosh says, kindly guide on point GST and income tax TDS on reimbursement as a pure agent. Yeah, so income tax TDS. Now, you see, let us take an example. We will deliberate this for 1 minute since this question has been asked. Let us take the example of a CHA. Now, CHA, say of the terminal handling company charges GST on its invoice to the importer. The bill is given to the CHA. The CHA makes the payment of this amount along with GST. The importer takes the credit of that GST and it pays the amount to the CHA. So this is the end of the story as far as GST is concerned. The ITC in such case cannot be denied by the GST department because a payment to a third party would be considered to be as a valid payment. Now, as far as income tax TDS is concerned, income tax, if the handling charges or the terminal handling charges is liable to TDS, the freight and forwarder has to deduct TDS and pay to the terminal handling company, or for that matter, freight or whatever may be the services. You have to see the main service, whether it is exigible to TDS. TDS has to be deducted by the CHA. And then the importer, when making the payment to the CHA, may or may not deduct the TDS. However, if the CHA does not deduct the TDS, the importer has mandatorily required to deduct the TDS until and unless this terminal handling charges or whatever services might be is not eligible for TDS, or there is a TDS exemption certificate which is provided by this service provider to the CHA and the importer. So this is it in brief. We can discuss this, with example. I have discussed this with an example for better clarity. This is applicable on all reimbursements as pure agents. One important point again is that CHA has to disclose this amount as no supply in his GSTR 99C. If he does, many a times they net it off, and this importer, it deducts TDS, discloses it in the 26AS of the CHA, and then CHA gets a notice from the income tax department. So you have to disclose it in your income tax return if you are a CHA, as well as the GST 9 and 9C as a no supply. Can center authorize issue notices to taxpayer falls under state jurisdiction? Can center authorities issue notice to taxpayers falling under state jurisdiction? You see, no. If you are talking about notices, no, they cannot. However, if it is a Section 67 investigation, then they can do an investigation. But they cannot do GST audit or issue notices under scrutiny, etc. to taxpayers who are under state authorities. Okay, so I think we have clarified all the questions. Mr. Vikash Mittal says, unmute me. I have a question to ask. Mr. Mittal, you can unmute yourself, I think, and ask your question. Okay. This is
Vivek, hi.
Yeah, please tell me.
Yeah. Good afternoon, Vivek. So my question is in respect of the judgment of Honorable Supreme Court in the case of Mohit Mineral. So what has happened? Interestingly, the Gujarat High Court has held that the importers in the case of CIF import are not the recipient of transportation services which is arranged by the exporter. But the Honorable Supreme Court has discarded that, and it has said that the importers, although they very much, can be said to be the recipient of the transportation services. Okay, although the consideration is paid by the exporter in the case of CIF import, but notwithstanding that, since the importer are the ultimate beneficiary of the shipping services arranged by the exporter, on that account, it can be held to be recipient. So, what are your views upon such interpretation given by the Honorable Supreme Court on the term recipient in the recipient of transport service in the case of CIF import?
See, there are two things. First, of course, if we talk about this instant case, you see paragraph 253 and 254, where the final judgment is that this entries to the extent of ocean freight GST, that is held ultra virus. Now, the second is this Honorable Supreme Court's views in case of recipient. Well, you can point out the required para where it states so, but I don't think the Honorable Apex Court has held this, that the importer being a beneficiary is a recipient of the service. You can just review this. Yeah. Mr. Dheeraj Bhandari has said how to seek an extension for replying to ASMT 10 in ASMT 11 or wide separate letter. Wide ASMT 11 only, Mr. Bhandari. Practically department, yeah, it is ASMT 11 only. So I think we have answered all the queries. Thank you very much, ladies and gentlemen, for attending this webinar. And we'll hold our next colloquium in the next month on all the issues under indirect taxes. This PPT and link would be shared with you. Over to you, Samir.
Thank you, Vivek. Thank you. Sorry. Sorry. Thank you, Vivek. Thank you, Rohit, for taking us through this session. Uh, I'm sure this was quite lengthy, but still it was worth the time. Uh, and thank you, participants, for being patient with us and going through this entire session. We will, if anybody has a requirement of this video or the PPT, please mail me at Samir, SAMIR at vilgst.com, and we will share the PPT and the video link on the mail. With this, we come to the end of this session. Hope to see you in the next session next month. Thanks, everyone. With this, we close this session. Thanks, Vivek. Thanks, Rohit.
Thank you.
Thank you, Vivek sir and Rohit sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinar every month, and we hope we will get you into upcoming webinar as well. We will shortly share PPT and video link to all the participants. Thank you.